Okay. Come here. Come here. Y'all know y'all not supposed to be here, but lay down. Lay down. Lay down. Lay down. Lay. Lay. Brisky. Lay down. Alright, you gotta lock in. Huncho, lay down. Lay down. Come on. I gotta lock in. Alright. What's the word, y'all? Okay, so I just wanted to come on here and kind of go over my strategy. Personally, I don't think it's talked enough about how people should stick to one strategy and that's it. So no matter if you're learning from me or learning from someone else, don't go strategy to strategy. And that is kind of the main reason why I'm just gonna put this on here, because I'm claiming it that I am done going strategy to strategy. This is my one and only strategy that I'm sticking to. Claiming it. Claiming it. We claiming it. Alright, let's go. So I got on here. I think I want to make it like a Google Drive, like just a doc to make it easier to see. There we go. I feel like everything moving a little slow, but hey, bad. Lay down. What you doing? Lay down. Right, my bad. Don't mind the dogs. Okay, so let's go. We got T4 trades, ECT, strapped. All right. So I'm calling the ECT. That shit crazy. That we got ICT. We got everything. I'm just calling the ECT to make it a little bit easier to say. You feel me? What ECT stands for? Let's copy this on here, and then we can take this off. We got first. Let's put on here. Let's make this a little bigger. Come on. Sorry, I'm only good at numbers, so bear with me. ECT. Right. Let's make this a little smaller. Why is my screen moving like slow? Alright, it's time to upgrade the PC. It's time to upgrade the PC. So we got external. Alright. We need closure. And then we need timing. Because you can have the external, I mean, it's going to be external, internal, but for the most part, it's going to be used on external. What I mean by external is market structure, right? When you have market structure, let's go to a higher time frame. You have what you call, let's delete all of this. You have what you call external and internal market structure, okay? So what that means is what people teach when it comes to higher highs and higher lows, they don't make it to where they really explain how those are, like, how would I say it, calculated or confirmed, the higher highs or higher lows. You get me? They just say higher highs, higher lows, but they don't tell you how to catch the move before it happens, or how it is kind of like anticipated. You get me? Like, how do we know this is about to become a higher high other than it being a supply or demand? You get me? Or how do we know this is going to become a higher low other than it being a demand or a previous supply. You get me? Hold on 1 second. 1 second. My bad. Okay, so thank y'all for chilling. What was I saying? External and internal higher highs and higher lows, right? And nobody really explains how they're kind of caught out, or how they're kind of. Why do I always get caught up in the most easiest sentences, but the hardest sentences I can make sound easy? Backwards. Anyways, this is gonna have to do with price action. We're gonna need price action. Okay, I just write down a couple of things that you're gonna want to learn when it comes to the strategy. Price action. And I'm gonna make more videos on it. This is just a real raw, uncut, just me just showing it how I would do it. And I feel like this video is way more better than me just trying to break it down piece by piece. You feel me? But it's still gonna be sections where they're broken down piece by piece as I start to have more time to kind of like just make these videos. It's a Saturday, 11 p.m. Feel me? We're chilling. We got the dogs in the background, and I just felt like sharing something that's very valuable. And I just ended up saying, let's go live. So we got price action, obviously timing, patience, like the things that's needed to understand is price action, timing, patience, and confidence. That's probably the biggest one, because what day trading is, it's the total opposite for what you actually do. It's not about learning things. It's about unlearning things. You get me? So it's going to kind of be hard to go with how I think I teach or go about it the way I trade, because I'm not going to lie, it's kind of the opposite of how others learn. And I don't see a lot of people teaching it. I don't see a lot of people really going about it the way that I feel like I've seen one person. I just watched a video on it, and that's the reason why I'm kind of having the confidence actually, or the courage to like say, okay, let's go put it out there. But he has his own way of going about it. You get me? Mine is with price action. And fuck it, confidence. Let's leave it at that, and let's get to it. So let's press bar replay, right? Notice that we got let's move this right here. Notice that we got a higher low. And why is this a higher low? Because it broke this previous high, right? So when it comes from that higher high being broken, and this previous high being broken, and this was the previous low, external wise, we have to just go over price action at that point. This is completed as a new high for sure. Not this over here, but over here. This will be a new high if 3 or more candles avoid touching this previous price, which is 706. So I will explain it in this way. We got, I feel like y'all should go to the candle. Yeah. Come on. Candle. I can't do it. Candle. Risky. Candle. There's nobody here. Candle. Okay. No. Look, no bullshit. It was like the blowing. But look, okay, bet. Let's get back to it. All right. Maybe it's too many tabs open. Okay, so what I mean by this is confirmed as a new high I mean, literally this. I did it wrong. Here we go. Boom. We need 3 or more candles from this area to break, to complete a new high. Look, I'm explaining it wrong. Hold on. We'll mark these 2 levels off for y'all. So we got a black, that's the external, and then this red level is letting me know that it already broke. So let me break it down like this. People describe new highs and breaker structures in different ways. Me, I have 2 different ways for there to be a break, okay? And that reason is, after a break happens, people don't know if it's going to keep going or if it's going to pull back. I found a way to understand and literally have a higher chance of knowing if it's going to pull back or keep going. And that is why I have 2 highs. You get me? So let's go. This black level right here, let's make it purple, is an external high. The highest it's ever been, right? And from there, the way that I look at it, it used to kind of, and I want to make it as transparent as possible. It used to, how would I say this? It used to make me question trading. You feel me? When we get to all-time highs, it used to make me question trading, because what one person might say, the other person wouldn't. And what the other person would say, the next person wasn't saying. You get me? It's like so much misinformation. And I had to come to a point where I had to ask myself, what do I think is going to happen once it comes up here every single time to a new high? Not just what somebody else says, it's what do I think? You feel me? So what I get from that is price action is the only way I can learn. There's no other way for the charts to communicate back to you other than through the candlesticks and through price action. All right, price action. So we have 1, 2, 3 candles closing back below, right back below this high. When it comes to that happening, it doesn't mean that it's going to come all the way back down. No, it just means that it has to pull back. It has to pull back to the previous higher low before this high was made. So we have multiple highs and multiple lows that we're looking out for. We have the previous high, we have the new high, and we have the previous higher low. Okay? So we got the previous high, and what can I drag you? Previous high, we can make that yellow or whatever. We got the new high, and this is all it is, rinse and repeat. We got a new high, call it breaker structure, whatever you want, and then we have the previous higher low. How do I say it? Previous, you know what? I'm saying it wrong. The first higher low before liquidity run. Boom. Those 3 things will help you identify a significant part of market structure, okay? And market structure is what matters overall. Where you're at in the market structure is what matters overall. You get me? It's gonna sound like I'm kind of mixing up my words or using different ways to say it, but bear with me, I'm literally saying the same thing. So don't look for too much information. Look for this information that matters, that can help you identify what you need. You feel me? Like, you're going to take a part of what I do and make it work for you. Truthfully, I feel like it's going to be a everybody does the same thing type of thing, because that's kind of what the strategy is. Like, it feels like it's where the banks It feels like it's where the institutions, the people that have big money, it feels like it's where they get in. And I'll show you why. So, I obviously have a previous high, I have a new high, and I have the first higher low before the liquidity run. The liquidity run, which was right here, ended up running through liquidity through here. And I'll make this area blue. And what I mean by through there is we didn't just have external liquidity. So we have external liquidity. We also have a liquidity run that ran through internal liquidity. Okay? And that internal liquidity is the people that thought we weren't going to come back up here and stop out the stop losses up here. You feel me? Above this previous high. So we have hella internal liquidity of people having stop losses everywhere in between here that got stopped out. And that's where you anticipate the trade. You get me? You anticipate that after all of these stop losses are put in, you have to know when it's going to stop and then go the next way. And it's a rinse and repeat type of thing. Hold on. Red, I'm on. All right, y'all. So, as I was saying, the liquidity run is what a lot of people aren't able to just simplify. There's always going to be a liquidity run, and not just a liquidity sweep. There's always going to be a liquidity run, and those runs is where you make your money. Those sweeps are where you take your money out. Okay, and it's easy to identify one or the other. So, previous high and new highs are two different highs. Previous high is where we're going to usually see a liquidity sweep at. You get me? And depending on if you're looking at internal previous highs or external previous highs, you will be able to understand that the pullbacks are easier to kind of predict. Like, oh, this is a previous high. Okay, to what part of structure? Internally, okay, if it's a previous high to internal structure, 9 times out of 10 is going to pull back. This was once a high, right? Let's just come over here. Here it goes. This was once a higher low, but or a lower high. Once we came above this lower high, we ran and we swept. But everybody that had their stop losses put in to sweep, and they left them up here, they have to understand more than just liquidity sweeps and liquidity runs or just supply and demand. They have to understand market structure. So knowing that we're in this part of market structure, this was a liquidity run that it made, hitting the external part of structure. Once it hit that external part of structure, which was that previous higher low, you feel me? After we made this new high, all it did was target all the way back up to the top where there was liquidity resting. So obviously nobody's going to hold a trade all the way up here because that's just doing too much. You feel me? And I ain't gonna lie, why not take a trade every day to just get a little bit, knowing that you can risk as much as you want and make the same amount that you can make off of this trade, but in one day. All because you know where it's at overall. You get me? Like, there's different ways to trade. There's so many different ways, but I feel like this is the easiest because you know where you're at between structure. It's like you know every single part of trading. You know every single part of the charts, the fucking candlesticks, and it's more than just fundamentals. You feel me? So I'm a big advocate for technicals, and I get deep about it. So let's keep going. Let's go back to the daily for the 4 hour. So let's just say we're up here, right? And when it comes to being up here, I'll just move this. When it comes to being at this previous high, right? This new high. We're working our way down. So let's turn our sessions sessions on to see what we want to do. Notice how we have reached the external high and we have made a new high. But to anticipate and know where it's going to go next, if it's going to do a liquidity run and keep going, or if this is just a liquidity sweep, a higher low at the same time, meaning that it's going to liquidity sweep, make some more room for people to get in, obviously, because it's not just going to keep going up. We need to go stop out all of these people in here, and then we're going to go up. But this is how we identify it. No talking. Let's get to it. Let's go to our daily. Our daily, we have 1, 2, yep. We have 3 candles that wasn't able to take off, letting me know that we do want to come back down. But the furthest we want to come back down is to this red area, because this was my previous this was my last higher low before we make the liquidity run. So I want to look for price action down there, because I know overall we're not going to come all the way back down here. And even if we do, it's rare. So I'm going off of what a trended market usually gives you. So turn the sessions on. Go to the 4 hour. Based off of Monday, we got a new, let's go into Tuesday. Okay, Tuesday we're playing under here, we're consolidating. But overall, we have highs right here. And we have lows right here being respected, meaning that we have to come back up here to these highs before anything. But let's see how it looks in between session. Boom, we're playing. Closed under. Okay, boom. When it comes to that, let's go to the hourly. We broke out of consolidation before the markets open. When the markets open, it came back. We continue to sell off out of that consolidation. But that's only setting me up for the move that I want. So when it comes to the move that I want, I know that the market is not going to keep selling. And for the people that see sales during the market times right now, y'all are fucking dumb. That is not how money is made. You can't just make money in a, come on, bro. So when it comes to these lows right here, I definitely want to make this easier for y'all to understand. Let's mark up my daily time frame, because I showed y'all the way that I look at it liquidity wise, right? I showed y'all my outlook on just looking at it to where how I read it, liquidity, like just reading the structure off of liquidity. Now I want to show you all how I read it off of price action, because you're going to need both. So I need to mark off we got a high. There. And then I'm gonna need that. Keep deleting it. Previous high, new high, first higher low. Okay, boom. Now I need my 4 hours, because it makes it way easier instead of just searching. So I look for highs that were broken from the 4 hour. That's an area, we mark that as red. Boom. And if I got any more, another one right there. Boom. 9 times out of 10, this is my area that we're searching for to come down. That is my area. We're on Tuesday. Let's go to the hourly. 9 times out of 10, after 10 o'clock, we're not trading on that day. So let's wait until Wednesday. Wednesday, we're here. Okay, let's go to my 15 minute. Because at this point, this is how I trade. This is my exact level that I'm looking for a trade for. 1, 2, should close back above 3. Boom. Let's go to the 5-minute. 9 times out of 10, we just swept this area of liquidity. Let's try to find an entry because we're not going to come under here. We're not. Now we're going to go sweep liquidity. This is just a trade for us to sweep or have a liquidity run before pulling back. Because price has to do its thing. You feel me? Like when we be seeing all of these moves from this condition to that condition, from this condition, that's price literally fluctuating and preparing for its overall move. But I already know where the overall move is going to go because I'm able to read not only liquidity but price action. You get me? So let's see if we can find an entry. It's also 8:15, so we still got time. Oh, not yet. No trade. Still no trade. It was a great, this is the thing, confidence, right? Me saying that we have to come all the way back up there, I want to find a reason to give y'all a reason to get in, but me, all I need is my level, right? But I didn't take the trade. So, doesn't mean that I'm not going to find the trade. Let's get into the next day. Okay, we're playing back under. See how the 4 hours looking. Obviously it shows that we're going to sell, but I don't want sales. I want buys. In order for us to buy, 7 a.m., 15-minute. Nope. In order for us to buy, we already swept these highs. We have to come back down here. So with that being said, let's go to the 5-minute. I would take a sell. We get to the 1-minute. This is our previous low. This is getting down and dirty. This is getting down and dirty. So I said I wasn't gonna take a sell, but look, this is the easiest trade because we're not ready to buy yet, and this is just more advanced. So I'll put a 40-point stop loss, and I'm targeting these lows down here. And this is just off of price action. Looks like we're showing support. Still not ready. We still need to go down and hit that liquidity. Still not ready. Give me my money. Give me my money. Either way, bro, I'm out of the trade, but you get the point. Well, you probably don't. So, based off of, oh, we hit. Oh, that was on a 5-minute, so we did hit that day. So, based off of price action, right? I'm able to take trades both ways. I don't want to teach that, but at the same time, it is a time to do it. When you're able to see that price is gonna kind of tell you everything. So if you're going off of price action and you're not just getting in because you want to get in, you can take the buys and sells. All right. Me, I had 3 confluences. Let's see. We got previous low, right? The first low, the first higher low before the liquidity run. So notice how before we made this big ass run all the way to the top, we were in a downtrend, right? We were still trending down. So before we could go into an uptrend, we have to identify where is the previous high before we break it and then claim that we're in an uptrend. So it's not just the external, we have to do internal work too. Internal wise, we were in an uptrend internally, we swept liquidity, and then we pulled back, going into an internal downtrend. So when it comes to that internal downtrend, all you're looking for is the previous high that got broken, right? After it gets broken, where we're able to say sessions turn on. This all happened in Asian session. This is why you don't want to trade Asian session, because your move has to be created. This is why I love to trade in Asian session, because I was able to learn from why I shouldn't. You get me? But I'm telling you, you don't have to. And that's what a good mentor or teacher puts you in a position to do. Not, oh, if you're going to do this, this is how you do it. No, it's, bro, I learned from this, bro. Don't do that. I learned from that, bro. Don't do that. Okay? So we got all of this right here. That showed that it looked like a break, right? But on a higher time frame, it closed back above. When it comes to that happening, we are anticipating for us to basically continue back to this internal high, higher low, or previous high, to make a liquidity run or a liquidity sweep, because it could have went into consolidation, swept, and came back lower. But instead, it made a liquidity run. It kept taking out all of these stop losses over here. Everybody that had a stop loss through here. Let me take these sessions off. Everybody that had a stop loss here, stop loss here. Like, notice, people got supply. None of that shit really mattered to me. Not even gonna lie to you. I'm not looking at no demand, previous demand, none of that. All I'm looking at is liquidity and price action. I know that this is not a break to the downside to continue off of what they're trying to present, which is a downtrend. No. It is literally just a pullback for a liquidity run to the previous low before it broke the high. That's some more shit. I'm gonna just stick to this. On a 4-hour time frame, it didn't close. Let me show you. I'll make it simpler for you. On 1 hour, it looked like it broke. What the 4 hour do? Reject, close under, affect everybody out, liquidity grab, liquidity grab, boom, close back above. We continued up here. We could have called it easy buys through here, all the way back to the top. Stop loss 30, 40 points easily, because you shouldn't have to get in at the no low or anything. Like, it should be able to be. You shouldn't have to get in between. You should be able to literally anticipate the candlestick, and that's what it is. That's why I couldn't explain. I don't look at supply and demand. I look at how the candlesticks are closing at specific areas, and that's why you have to have the confidence, and you have to learn candlestick analogy or candlestick anatomy. Like, you have to get better with your candlesticks and identifying what's going to happen next. So, based off of here, we're getting to 9 a.m. I think this is where I was saying I wanted to buy, but based off of what it's showing, we got high, we swept, we got low, close it under, close back above. See, at that point, it looks like it wants to continue buying. Okay, boom, we swept liquidity again. On my mama, we ready to buy. We're ready to buy easily. But we have to get into sessions, so let's go back into the hourly. 5. We're playing above this area of liquidity, but at the same time, we have to come back down here. Let me see, 15 minute. 15 minutes still playing above. Yeah, 15 minutes still playing above. Swept liquidity. Close back above, we take buys. But I don't trade before sessions, so hopefully it doesn't take off without us. Oh my gosh. They gave us 2 different entries. It took off, but it pulled back. See, that was just too much. For even it to pull back like that, that's just it would have stopped me out. So that's why you wait. Turn the sessions off. The only way I see you could have got in, knowing that all of this just happened all at once. You wait, it claim back above. You go to your hourly. You don't even need your hourly. You could just look at your level. Your level is steadily showing support. It hasn't broke this area. Go to the 5 minute. We got to go off of the timing of everything. So let me just do this. Instead of going off of, oh, I could have caught this big ass. Oh my goodness. Hey, I don't give a fuck. I could have caught it. I can't be picture perfect with explaining everything. I was clicking the buttons too fast. But let's see. Let's turn the sessions on. Let's turn the 15 minute on. Okay. Look what we have here. We We have new highs, new lows. We swept these lows, or we swept these highs internally, and we came back to the previous low of what happened, of where it started, and swept those lows right here. So automatically, we have to come back up here. Automatically. We're not coming back down only because we're still hitting probably a supply that's just losing volume from pushing down. It's not trying to push down anymore. You get me? And because we're not trying to push down no more, and it's obviously able to see, look, we pushed down once, we pushed down twice, pushed down 3 times. We grabbed liquidity, we swept these lows from where it was literally showing support to even push through. We got more people to come in, more buyers and sellers once we got back up into this level, meaning that we're not going to push down no more. The more it hits these levels, the more it's going to break through. So knowing that you're putting that with timing, we have the external sweep, right? External sweep. We got the internal closure, and we got timing. Obviously, you could have waited, you could have got in quicker, but me, I got 40-point stop losses, so it looks like I would have lost and then possibly bounce back. And after bouncing back and seeing that it closed again, I don't want to go against my bias. I don't have to go against my bias. Why? Because I already understand price action. Price action already lets me know that we're not going certain places anymore. We have to go a certain way. So when you need to understand if it's going to keep going or if it's going to pull back, you need to understand both price action and liquidity grabs. So this is all I need. Why? Because it could have easily reversed again and came back down. But at the same time, no, I'm tweaking. It's the same thing that I was saying internally. It's not going to keep hitting the area and then coming back. We hit it once, we hit it twice, we hit it 3 times. So once we started approaching up here, yeah, liquidity run. You put that liquidity run with external. Now, if we look at external, the 4-hour swept. We have to come back up here now. Now we're going to stop out everybody in here. We have to. Yeah, we have to. Rejected twice. Yeah. Easy. So I ain't gonna lie, it's really just it's a two thing game. You need to understand liquidity, you need to understand price action. But obviously this is the raw and uncut. I'm gonna drop more videos on specific what the fuck? Specific ways to identify the terminology that I'm using, from price action to liquidity, liquidity grabs, liquidity sweeps, liquidity runs. I don't use too much demand and supply. Obviously, that's what it is also, but I don't use them words. And other than that, I would say that this works on probably any pair. But you have to know when to trade it. You can't be trading a US pair during Asian session. Like, what the fuck? You can't be trading an Asian session pair like GJ during New York. I mean, you can, but 9 times out of 10, you would have traded better in London. But if you don't know how to trade it or when to trade it, or what it even like looks like type shit, like let's go to GJ. It should be easy to identify market structure, bro. It shouldn't be hard. It should not be hard. Based off of here, GJ possibly has to come all the way back down here. If I'm not mistaken, let's go to the 4-hour. Yeah, we have to come back down here. And once we come down here, we're gonna possibly continue up. It depends. All on if we break, because this could be a liquidity sweep from these highs for us to want to come back down, all the way back down here. But that's why I don't like, I think I'm getting out of trading currencies, because it's like they too choppy. Fuck. How did we do last summer? Fucking fell during July. Yup, and started chopping during. But once we get back into like wintertime, I ain't gonna lie, like October, I ain't gonna lie, it be streaks. It be straight consistency. Cause it don't be too many people like trading during them times for some reason, bro. some reason, there's not too many people trading during them times, and it's consistent. It's not too much volume, and that makes sense for currencies because who's traveling? The exchange rate and all of that. Obviously, that shit matters, but it's also about what the economy is doing too. So we gonna see. It might be different. This shit change up every fucking year. For some reason, people gotta understand that it's not ever gonna be the same, but it is easy to catch on and adapt to. You gotta learn a little bit of everything with this shit, bro. So everything that I had to say, it might not matter now, but it might matter in the future. I wasn't using all this at the beginning, but it matters now. So hopefully it helps y'all. Hopefully I explained a little bit of everything, but at the same time, it's just how I trade. And notice how I don't need to trade every trade, but it is easy to identify. I've been having a problem with just mastering it, and it's because I don't do shit like this. I don't write it down. I just remember it like, fuck it. Look at this. I don't want to do too much, but peep on that board right there. Y'all peep that board. That board is literally my strategy. I can't really get it. Y'all need to see too much, but I got it written down. It's in my head. It's just more so I'm just now starting to share with everybody. So I ain't changing this up, man. And I know this shit gonna last for years. I know people rewatching this in the future, bro. And I'm just thankful. For real. Learning this skill is not easy. But as long as you're making money from it, that's all that matters, bro. It's not even if you do it my way or the next way. It really don't matter. I agree with that. But this shit easy, bro. So I don't know. And it's too easy. So let's stick to it. I made about 19,000 in the last, since the 25th. So in the last 30 days, I was able to take out 19,000 from prop firms. And I ain't did too much live trading. So I was aiming for 100. For me to hit 20% of that, see, now I gotta aim for $500,000. If I hit 20% of that, but nah, bro, man, shoot high. Aim high, man. Aim fucking high. Aim the highest, bro. Come on, bro. People wish they had the opportunity to do this, bro. So do it for them. Do it for the ones that can't do it, bro. Like, I know everybody got that person that can't, bro, come on, bro. It's not just about you. Be a compassionate person. Help others, and don't gatekeep. I'm gonna charge for my time, but the information is right here. Put it together. Put the work in. But if you want me to put the work in with you, yeah, charge for that. Other than that, it's good capitalism because it could change your life forever. It's great capitalism because it's better than working for someone. It just requires people to put in work, self-work, and that's what we're gonna keep working on ourselves. I'm gonna go work on myself by smoking this wood. Then I'm gonna go work out later on, and then I'm gonna probably go eat a nice little dinner for myself, and then I'm gonna get ready for tomorrow. We're gonna go to church, and then get ready for Monday because it's a journey, bro, and you don't want to get caught up in all the noise. So find a reason, find a plan, find a schedule, and keep going.